doing business in Africa. You can't afford to be without Africa Investor.
AfricaPLC is an innovative B2B and B2G eTrade and e-commerce industrial marketplace and fintech platform that assists you grow your business in Africa and supports you champion the African Continental Free Trade Area. Accessing trade opportunities, credible partners, trade finance and reliable logistics solutions is the largest prohibitor for businesses seeking to expand across Africa and into global markets. AfricaPLC overcomes this by offering several fully integrated and secure digital industrial B2B and B2G marketplaces. These marketplaces assist millions of vetted buyers and SME suppliers manage their supply chains and access competitive trade finance, insurance and logistics services alongside each transaction. Buyers and sellers simply apply for registration. Once vetted and accredited by Africa Investor Ratings, they are listed on the platform and can post catalogues, request proposals, identify qualified business partners, and access competitive trade finance, insurance, and logistics solutions. For the public sector, AfricaPLC offers crowd buying and secure tender and procurement management platforms that support local content procurement from African SMEs. AfricaPLC is committed to supporting the growth of your organization through the African Continental Free Trade Area and globalizing African e-trade.
So happy Africa Day, and welcome on behalf of Africa Investor to the AI African Electronic Trade Leaders Roundtable on improving African buyer information and e-trade documentation in support of and in collaboration with the African Continental Free Trade Area Secretariat. My name is Hubert Danso. I am the chairman of Africa Investor, AfricaPLC, and the African Union's Continental Business Network, and I will chair this roundtable. I would firstly like to thank each of you present for taking the time out of your busy schedules for this electronic trade leaders roundtable on Africa Day during Africa Month. This electronic trade leaders roundtable has convened the world's leading trade and finance industry secretary generals, principally because of our collective recognition about the urgent need for innovative technology and data-driven public-private partnerships to improve the quality and the quantity of buyer information, e-trade documentation, and electronic certificates of origin as a tool that can support the implementation of the African Continental Free Trade Area. Today's roundtable, in accordance with the theme, is designed to showcase three things. One, e-trade policy recommendations that each of our institutions are working on. Two, innovative digitization partnerships to improve access to and the quality and the quantity of African buyer information, e-trade documentation, and electronic certificates of origin. And thirdly, to restate the African and the global business community's commitment to supporting the implementation of the African Continental Free Trade Area at both a digital and trade policy level, but also to increase and optimize access to global markets so that our companies can also participate more fully in the global share of trade. Innovative partnerships and collaboration with the African private sector and international organizations will be critical to Africa's trade and investment post-COVID-19 economic recovery, which is why I'm delighted to have partner secretary generals to fight this war and arrest the huge economic damage to our economies and SMEs caused by the pandemic. By way of introduction, today's discussion leaders include His Excellency Wamkele Mene, Secretary General of the African Continental Free Trade Area Secretariat, John Denton, the Secretary General of the International Chamber of Commerce, Kunio, Mikuriya, who is the Secretary General of the World Customs Organization, Peter Mulroy, who is the Secretary General of FCI Association, Vinco David, who is the Secretary General of Berne Union, and we have a special guest, Odusola, who is the resident representative of the Regional Bureau for Africa in South Africa. So to get us going, and regarding the policy recommendations component, we at Africa Investor, through our digital trade platform, AfricaPLC, strongly believe Africa's digital trade facilitation and digital transformation are quintessential to the continent's participation and success in the fourth industrial revolution. AfricaPLC is an innovative, fully integrated and secure B2B and B2G multi-sector industrial eTrade marketplace and fintech platform, have important perspectives on how the African Continental Free Trade Area is and can assist African economies leapfrog decades of development in the wake of this health and economic tragedy. We therefore agree and recognize this is a watershed moment to innovate new products and generate and document eTrade digitization insights that could support public and private sector policy breakthroughs. It's therefore our pleasure to present in this opening now to His Excellency Wamkele Mene, the AfricaPLC eTrade briefing roadmap report, which is essentially our call to action for eTrade digitization in support of the African Continental Free Trade Area. This AfricaPLC eTrade briefing roadmap report follows a series of multi-stakeholder and multi-sector consultations with a wide array of public and private sector organizations, each offering rich and diverse perspectives and recommendations for a sustainable digital transformation for the continent and support to and for the African Continental Free Trade Area. There is and was unanimous agreement between public and private sector leaders that the African Continental Free Trade Area as a trade and development instrument has the potential to be Africa's COVID-19 economic recovery stimulus and leapfrog and become the most competitive free trade area in the world, alleviating millions from poverty by enfranchising small and medium-sized enterprises, especially women and youth, by exploiting modern, secure e-trade technology and pursuing deepened partnerships with the private sector. The recommendations are set out in 5 parts with the following key points. Part 1 provides a perspective on the future of digital trade and how trade data can be used to inform policy making and develop financial products and services to promote financial inclusion, as well as how the digitalization and automation of regulation and compliance can create trust in the market and provide robust financial crime controls. Part 2 canvasses the implementation of digital technology solutions in logistics and automation. Part 3 suggests ways in which digitization can safeguard the increasingly complex and regulated world of trade finance, and how innovative solutions like regulatory and supervisory technology, RegTech and SupTech, can promote trade facilitation across the continent, assisting both regulators and the regulated. Part 4 provides a perspective on e-commerce and recommendations on boosting MSME digital trade. And finally, Part 5 highlights investment opportunities for digital infrastructure in Africa and how the public and private sectors can collaborate to scale digital technology solutions in finance, healthcare, and in agriculture. Excellency Mene, as we continue this journey and our generational African Continental Free Trade Area initiative, we look forward to working with you and the Secretariat and all public and private stakeholders to increase the African Continental Free Trade Area's competitiveness through the creation of modern digital trade corridors, in our view, and hopefully powered by supply chains of the future, driven by forward-looking regulation and e-trade marketplaces that enfranchise African SMEs. So it's my pleasure now to invite His Excellency Wamkele Mene to make his opening keynote remarks. where he will address the status and goals of the African Continental Free Trade Area's e-commerce, eTrade negotiations, and also provide some priorities on digital partnerships that he would like to see from African and global business and the trade finance and customs authorities to support the implementation of the African Continental Free Trade Area's trade agenda and vision. So over to you, Wamkele.
Thank you very much. Thank you, Hubert, and it's a pleasure to once again join the distinguished panelists for exchange of views on how we can advance digital trade in the context of the AfCFTA. And as we all noted the last time that we convened, the very first, at least that I'm aware of, the very first trade agreement to have obligations, regulations, and to create market access opportunities in digital trade was NAFTA. And I was looking at NAFTA last night, the original, not the revised version of the treaty, and it struck me how the global economy has shifted and how much catching up there is to be done for other trade agreements to reflect the global economy as it stands today. And in terms of catching up to the realities of the global economy, I'm very happy to inform all of you that in the last summit of the heads of states and government, I was directed to accelerate work and preparations for the negotiations of a protocol on digital trade. And the interesting point about this negotiation that is about to start on digital trade is that we have an opportunity in Africa to craft an instrument that actually will capture the challenges, the positive disruptors of the fourth industrial revolution, all the big questions on the Internet of Things, big data, additive manufacturing, all of these positive disruptors. We have an opportunity to craft a protocol on digital trade that will be sufficiently responsive to all of these particular challenges that we know we will confront. And that work is going to commence in July, the starting of the negotiations for that protocol. It is going to be, in my view, a far-reaching protocol that will cover regulatory principles, market access, intellectual property rights, the ownership of data, data transfer, data sovereignty, and a range of other questions that that individual countries are grappling with at the moment. We have to move, as we noted and we all agreed, we have to move rapidly to digitization of our customs procedures. We have now, since I've been in Accra, I have hosted heads of customs authorities 2 times in hybrid meetings. In one of the meetings, we were very happy that DG Mikuriya was able to join us and presented his remarks at that particular meeting. And I must confess, I was taken somewhat aback by the lack of embrace of digital platforms from a customs point of view. Maybe it is something that that we have to continue to lobby for, the heads of customs authorities. And my vision is for us to be able to do this through this protocol on digital trade, to shift our entire customs procedures, our trade regulations, rules of origin, to shift them onto a single window on a digital platform that any trader or anybody around the world can access in the palm of their hand. When we were in Bali in 2013, I believe it was December 2013, at the World Trade Organization Ministerial Conference, we, for the first time, the WTO agreed on principles for trade facilitation and regulations for trade facilitation. And one of the things that was a very, very vexing political problem was single window, and how to make sure that all countries adopt single window as an efficiency tool for customs procedures. And of course, we all know what happened after Bali. But the reason I mention the WTO Trade Facilitation Agreement is that when you sat in the negotiating room, this is exactly the type of an objective that the negotiators had at the time, and that is, how do you make trade far more efficient, less costly, affordable, and accessible to as many people as possible. And so this protocol that we're about to start negotiating, in my view, we can build on the World Trade Organization Trade Facilitation Agreement. We can look at what our customs authorities are already doing and create a single window digital platform which will enable all of our customs authorities to eventually migrate or to be plugged onto the platform itself. We discussed this with the customs authorities, and as I say, I think there's a degree of concern about security, legitimate concerns, but I know that these concerns can be addressed through blockchain and other security features. But really and truly, we must move away, as you said, from a 14-day period of waiting for a certificate of origin verification so that it can be done digitally and instantaneously. And so this is the priority for me, is to get this negotiation off the ground, to make sure that a very strong component of this protocol is customs procedures and a single window on the platform itself. I intend to invite all of you to Accra. I was just waiting for people to be vaccinated and for the COVID situation to be under control. But I would like us to sit with the customs authorities and the senior trade officials and exchange views which will lead to concrete action, views on and best experience, best international experience on how some of these digital platforms can be leveraged for growth, for market expansion, and of course, for inclusion, which is a very, very important objective also, to make sure that we have digital inclusion and that as we implement this agreement, as many people as possible have access to digital tools that will enable us to succeed. Now, let me just finish by making this point. We have been working with Afreximbank on a Pan-African payments and settlement platform, which will be a digital platform in support of trading under the AfCFTA to overcome this challenge of the cost of convertibility of currency in Africa. We have over 42 currencies on the African continent. If today, as I sit in Ghana, you want to trade with your counterparty in Kenya, you first have to convert the Ghanaian cedi into the dollar. They receive the dollar in Kenya. They then have to convert the dollar to the Kenyan shilling. And so we are devising a digital platform that will enable the sender to send their own currency, their local currency, and the receiver to receive their local currency without having to incur the cost of currency conversion. These are some of the tools, the digital platforms that we are looking into, which we believe are critical in support of implementation of the AfCFTA. And the reason I want to invite all of you to Accra is because I believe that there is scope for more innovation to be developed in the area of digital trade. And I believe that if our customs authorities hear directly from you as critical stakeholders in global business and in customs, I think it will go a long way in convincing them that certainly there is no harm in moving to a digital customs process, that in fact there are gains to be obtained from that. So once again, thank you very much, Hubert, for inviting me, and I very much look forward to the other viewpoints. Thank you.
Thank you very much, Wamkele, and we know that we have a champion and a partner in you, and you can certainly count on our continued support and interest. And we look forward to receiving the invitation that you mentioned. And we, are very clear. When we started this conversation about these initiatives and how to go about it, we're very clear, and we understood, the direction that you chose to take. You made very clear, let's not just come and sit around tables and talk. Let's innovate. Let's develop products. Let's actually have something that we can intermediate a conversation with our counterparts. Time for talking is behind us. So as we now move on to the second part of our program, we're actually looking at the whole first component. We'll look at the issue and area of electronic certificates of origin. I'm very pleased to say, Wamkele, that we've listened to and we've acted on the impetus that you provided as it relates to electronic certificates of origin, and we've established AfricaPLC Trade Docs, which is essentially a certificate of origin, electronic certificate of origin solution, which provides essentially chambers of commerce, authorizing bodies, exporters, freight forwarders, regional organizations, customs authorities, pure online tool for the issuance of electronic certificates of origin. AfricaPLC Docs combines the best of our electronic certificate of origin solutions with next generation technologies to offer the world's most powerful, in our view, electronic certificates of origin solution. It's already part of the world's largest electronic certificate of origin network, which includes about 340 plus chambers of commerce, 46,000 exporters and freight forwarders, all issuing ECOs out of about 18 export countries and receiving ECOs into 203 import countries. So our ECO platform is also integrated, and John's here to talk, with the ICC Certificate of Origin accreditation chain, which is designed to assist chambers of commerce in promoting universal certification standards. And so we feel that by using this type of platform, as you've rightfully pointed out, relevant parties can apply for, sign, stamp, receive back original electronic certificates of origin, eliminating, as you put it, that time-consuming and inefficient manual paper-based process. So my colleague Maynard will now just quickly take us through the platform so you can actually see what it does. Over to you, Maynard.
And welcome to AI Africa PLC's ECO platform. Using the platform will eliminate up to 95% of back office administration for chambers and will reduce the turnaround time for certificates to minutes rather than days. It will also significantly reduce the risk of liability and fraudulent use of certificates, as there are both reporting and verification tools available. The platform will increase customer satisfaction and add great value to chamber membership. There is also a significant cost saving for both exporters and chambers, allowing resources to be assigned elsewhere. Using the platform as an exporter, the exporter would select the certificate of origin and hit apply. There's an area for them to upload any supporting documents and to request for those documents to be certified by the chamber. And then there's the certificate of origin application itself. As you will see, all of the required fields for certificate of origin are present. When the exporter has completed the Certificate of Origin application, they press the Submit button to send it to their Chamber of Commerce. The applicant has two options. Chamber prints, where the application will go from the platform to the Chamber. The Chamber will print the certificate and manually stamp and sign it and send it back to the applicant. The other option is Exporter prints. This is by far the most popular and quickest option. The application will go to the Chamber through the platform, where the Chamber will electronically stamp and sign it and send it back to the applicant via the platform to print at their own desk. For the Exporter prints applications, once approved by the Chamber, the applicant presses the Issue button to generate the fully stamped Certificate of Origin. The Certificate of Origin contains the Chamber stamp, the certificate number, the date, and the Chamber signature. The certificate will also contain a QR code and verification key. To verify the authenticity of the document, the holder can scan the QR code, or they can go to certificateoforigin.com and enter the 20-digit unique number that is printed on the certificate. Once the unique verification key is entered, press the Submit button. When the holder presses Submit, the on-screen version of the certificate will appear. At the bottom of the certificate, in place of the Chamber stamps and signature, it will show the date the certificate was approved, the name of the Chamber user who approved it, and the name of the Chamber of Commerce. By displaying the certificate on the screen like this, the user can not only verify that the document was stamped by a recognized Chamber of Commerce, but that nothing has been altered on the certificate since it left the Chamber.
Thank you very much, May and Arden. I'm just hoping that gives a little bit of context to the way that we are beginning to provide some private sector approaches to complement some of the important work that's been done by the public sector in this respect. And since we are on the electronic certificates of origin component, and Wamkele has already talked about the importance of the role that customs organizations play, it's my pleasure to turn to you now, Kunio, to hopefully address two areas of this particular agenda. One is, it would be great to get your insights on areas of collaboration for potential pilot initiatives for customs administrations with the African private sector for electronic certificates of origin that support the African Continental Free Trade Area and the points that Wamkele has outlined and identified. And then if you could perhaps just finish off with some policy recommendations that you feel could assist business, governments, chambers of commerce and policymakers actually support customs administrations implement electronic certificates of origin to support the African Continental Free Trade Area's agenda. We realize that we have to work together. Some of us are further ahead than others, but we all need to align where we can and work together. And that's why we're very keen to be able to bring some ideas to the table and collaborate and find that middle ground for us all to move the agenda forward. So over to you, Kunio.
Okay, thank you very much. It's a great pleasure to see many familiar faces. And there are two issues. One is certificate of origin, electronic one, and another is more broader digitization. So I will deal with those two issues. First, about digitization of trade document. This is very important, as Wamkele said. It is for facilitating the free flow of trade. Digitization of trade documentation is what we are pushing for. And it is particularly important for Africa because I know that there are some needs to travel to obtain and lodge physical documents. And that may pose significant practical and economic and even security issues. And that make it difficult for especially SMEs and women traders to really be integrated into the trading system. So I fully support this digitization and including the certificate of origin. And when I look into the African Continental Free Trade Area agreement, I can see that there are provisions and for measures such as the automation of custom processes, use of information and communication technology, implementation of electronic single window, electronic certificate of origin, and application of international standards. They are all very important. It's a foundation for a paperless customs environment leading to electronic trade. And when I look into the e-certificate of origin, this is, of course, this will reduce the cost of trade, but also this may prevent tampering with the certificate of origin because there's always risk that paper-based certificate of origin, which could be easily forged, but electronic means when it is properly managed, that will reduce those risks. And also, as certificate of origin is the basis of any regional integration, including African Free Trade Area or NAFTA or any other integration. So it is very important to start with this digitization. And what I would like to see is that, especially the current environment of COVID-19, many customs administrations move to accept more digitization because in the context of, paperless or contactless way of life and in social distancing, it is very important to accept the electronic certificate of origin and other digitization. And I note that this is a priority for Africa. And as concrete areas of collaborations, the WCO could share, of course, best practices around the world and assist a potential pilot initiative using certificate of origin and, of course, related certificate capacity building, because tool or technology is not really solve the problem, but it should be used properly by the human beings. So capacity building is very important. And when it comes to origin, we already started to talk the European Union, because the European Union has already supported us to provide funding for a project of harmonized system classification. This is the basics. And on that, the origin is there. So we are getting the talk, and we will involve African Free Trade Area Secretariat, but the regional economic communities and national administrations. And one important aspect being taken into account in these talks with the European Union, the donor, is that let's use that for innovative technological solution. So it's not only how to read the electronic certificate, but let's turn it to more data-driven public-private partnerships to improve the quality and quantity of buyer information, eTrade documents. And as you are aware, for the WCO's African HS project funded by EU already addresses that IT part. We have implemented electronic tariff tools, and now we are launching a pilot initiative to implement electronic advanced ruling on classification and origin, because advanced ruling is really key for traders to get the transparency and the predictability of trade. And in this connection, I would like to little bit to go to the international standards, how it is useful. Because you talked about electronic certificate of origin, but what kind of data should be included in that certificate of origin? So we worked with ASEAN. This is the Association of Southeast Asian Countries and nations, and 10 countries. And we developed the data model derived information package for certificate of origin in the ASEAN. So 10 ASEAN countries can use that WCO package, data package, what kind of data is there. And well, they are using, and we try to address more. So you have a good already model that could be, of course, applied in African context. And now I'm turning to some of recommendations for this, digitalized trade. First, enabling legislation towards paperless custom procedures is very important, because protocol, now I understand that the protocol is being developed, but national legislation should follow. And also, in terms of a single window, if you observe that the custom is lagging behind because they have a problem in connecting with other government agencies, because all customs administration have their IT system. What is important is to connect customs IT system to other government agencies. And other government agencies are lagging behind the introduction of IT. Because customs is a revenue generator, so usually it is the first to get digitization, whereas other government agencies are lagging behind. This is why certifications, permits, they are quite often paper trade. But then I would like to tell a story of ASEAN. The ASEAN Asian countries want to implement single window, ASEAN-wide single window. And then they had a problem because first they went too quick to the regional level. Before that, they have to do their own homework at national level. So I advise them that, okay, single window is what we all aimed for. But first, start really good national coordination, please. And this is where Wamkele talked about WTO's trade facilitation agreement. There is a good mechanism of National Committee of Trade Facilitation. This is where they can get all those other government agencies and make commitment that they will be connected to customs, or customs can connect to them. And this requires really high-level authority, ministers, or prime minister, or even president, to push for that. This is the experience that I got, and ASEAN got a good model that they agreed on that by 2016, all 10 countries will complete a national single window. And then starting from national single window to move on to regional single window. And for that regional single window, what are they sharing? This is rules of origin. So electronic single rules of origin is now shared within 10 ASEAN members for their regional integration. So this is a step that I can recommend. And also, secondly, as we are talking about data and advanced electronic data, we need to get advanced electronic data before the arrival of goods. That electronic data should be submitted to customs, and customs go through very quickly risk assessment so that this is okay to facilitate. They should be confident to facilitate the movement of goods without control. Whereas another one is that with that electronic data, they can get what the business is doing, what is the business needs, and how they can facilitate is what they can get. And then third recommendation is pre-arrival processing, meaning that even before arrival of goods, you can already process that clearance procedures, and that simplified custom procedure is necessary, especially for low-value goods, because it doesn't make sense to spend too much time and energy on low-value goods to clear. And then this is really relevant to e-commerce, because most of e-commerce goods are supposedly low-value shipments. And then for the e-commerce, well, in Africa, I know that you have post authorities. So how to get the post and the customs share information, data is also important. I talked to UPU, Universal Postal Union, several years ago, and they changed their standards that postal authorities can share their data with the customs authorities so that they can facilitate the cross-border movement of goods. So that cooperation is important. And fifthly, interconnectivity is very important. Customs system, when it is connected to other government agencies and then with their partner administrations, you need interconnectivity of IT systems. And where we really, WCO really provides that standards. And then sixthly, e-payment, because movement of goods, that is what customs sees. But the payment, you need to get the e-payment system, because otherwise you can't really secure fair and transparent transaction. So e-payment is the part of this recommendation. And seventhly, when you get more, then why not use non-intrusive inspection? Rather than opening up all containers, you need scanners so that you don't have to open the scanners when you see irregularities with the images. Of course, you need to make sure that customers should get ownership approach, because I heard from Wamkele that perhaps there might be lack of ownership, but they are the real experts, so they have to own the system and try to use data risk management. And eighth, and finally, because I said too much about that, but one important recommendation is coordination with stakeholders. Well, because customers alone cannot do their job. They need to work with business, but also with other government agencies. Well, I said those 8 things are many recommendations. Those I would like to see these paperless customs recommendations leading African continental area custom administrations to be technology driven. What I said was really basis for being technology driven. And as you might have noticed, digital era brought the availability of data. And the data is the new oil, new gold, whatever you say. And all custom administration have data, whether it is in Africa or in Europe, that's the same thing. So how to use that data is very important. And there you can bring the new disruptive technologies of blockchain to get data and artificial intelligence to analyze data with the customer's knowledge, for example. And they are available, so WCO's capacity building is moving more onto that artificial intelligence, how to use them with African customs. Well, so those are some of the recommendations that I really would like to support African integration, creating new market, and I would like to reiterate my commitment to supporting creating one market in Africa. Thank you.
Thank you very much, Kunio. I think that's I don't think we can disagree with anything that you've said there. To be honest, my real concern is Wamkele's comments in the beginning, where he said he's inviting us to Accra. And we know that we don't want to just go to Accra to enjoy the hospitality. So we really are going to need to try to figure out between now and that time, because there's a trust building exercise that needs to take place that is either underpinned or supported with technology that will be hopefully over time embraced by the heads of the customs administrations that Wamkele mentioned. Certainly could do with a bit more motivation to advance all of those important areas that you've mapped out. So thank you very much for those comments, and we certainly would look forward going offline to be able to come up with something ahead of going to Accra that is compelling and that would assist build that particular trust and give some demonstration effect. So thank you very much for those words. And you also talked quite a bit about building capacity, across all of the critical stakeholders. So I'm now going to turn to John Denton from the ICC, who at our last meeting collaborated with Africa Investor to launch the Digitize 5 Million SMEs initiative. So I'm really going to call on John to sort of share with us some of his recommendations for sort of pilot initiatives for digitization, and maybe talk a little bit about some of the work that he's doing with the building that capacity and laying that foundation through the centers of entrepreneurship. And then again, pretty much like your role there, Kunio, we're going to ask John for sort of 3 big policy recommendations to assist business, government, chambers of commerce, and policymakers create minimum viable ecosystems for African trade documentation. Because it is not just the technology, or it is not just this sort of perception of the market. Most of this technology won't be scaled unless there is enough of a critical mass to support and mobilize the investment and its adoption. So over to you, John.
Thanks very much, Hubert, and it's great to see Wamkele and Kunio and the team. Again, it's been a while, Wamkele, since you and I have spoken, but I know our teams have been talking, and sometimes I feel, Kunio, we almost have a weekly conversation now, such as commerce driven and the importance of customs, particularly in the midst of the pandemic and everything we've been doing. It's always very interesting for me just to listen, and if I can just frame my comments a little bit differently than you might have expected. First of all, I think from my experience, this goes to motivating people. We need to not just talk about the importance of digital and the opportunities it provides for the African continent. We actually need to find and articulate clearly the economic case. I say that with some authority now, having been involved in the private sector representative on COVAX, the inability originally to actually enable momentum to build around funding, fully funding COVAX, whilst it was seen as a development issue. I'll just be really frank with you. It was only when we at the ICC actually launched our, what's now seen as the, effectively, the study on the economic consequences of failure to fund the COVAX facility, that we're able to change the debate, and we actually funded that and created an economic analysis which has been compelling. I presented to G20 ministers, trade ministers, Bretton Woods, and the debate now is actually still about funding, but what we're saying is that this is not a development issue. Don't tell your development ministers to find another 50 million in their bucket. This is actually a fundamental issue for leaders and finance ministers, because the failure to fund it will actually mean the pandemic doesn't come to an end, and what that actually means is economic growth will not come back, and that will be a $9.2 trillion hit, more than half of which goes to developed economies. Now that gets attention. And so when we talk about the importance of digital, yeah, there's the opportunity, but I do think a bit more work needs to be done on the economic case for it, to be frank with you. We've been doing work on that, and we'll do some more work on that because, and I'll come back to why, but as you know, our role is to enable business worldwide, and we think enabling business in the 21st century is to create an environment and a platform where digital exchanges are actually able to be made and are accountable and are enforceable. But we do know on cross-border trade that there are dollars that can be articulated and determined. I don't have the economic analysis for Africa. Perhaps, Vinci, you've got that, but I can tell you by reference, and Kunio referenced the ASEAN before and some of the work on certificates of origin, but we do know, working with SCAP, that effective implementation of paperless trade processes across global value chains will reduce trade costs by more than a quarter. And we actually commissioned, because we've just been, frankly, we've been very successful in some advocacy at G7 on this particular point, and we led with economic analysis, and we did it because we wanted to effectively, given G7 is led by the UK, we wanted to put pressure on the UK to actually take this issue up. And what we were able to find was that by moving to a fully digital process for completing trade documentation, you will cut down the time it takes to complete international transactions by as much as 3/4 and deliver $250 billion in growth and efficiency savings to one economy alone, which is the UK economy, including 25 billion for SMEs and an extra 1 billion just out of trade finance. Now I say that because we actually focused on the UK because we wanted to motivate them to take this issue up at the G7. We now have a declaration from the G7 digital ministers that supports what we actually want, which is, we'll come to next, the creation of a conducive ecosystem to enable effective digitisation. So I frankly think, friends, that we actually need to get that work done. We're happy to work with you, Wamkele. Maybe you've got it, and I don't want to presume you have it. But if we don't have that economic analysis, if you really want to get the attention of leaders, and if you really want to motivate action, I think we really need to dig into that. And it's what we do now, because we realise advocacy is interesting, but results is what really matters. So if I can just describe that as a point, so I think we accept as a given the opportunities, but I think we need to prove the economic advantage that will flow from it as well. But that does create an opportunity. And then this ecosystem, this digitally conducive ecosystem, for me, and from the ICC's perspective, there are five key characteristics of this ecosystem. First of all, and maybe this is going straight with a mallet, because I'm an Australian and the end go straight to the point, whatever we do actually needs to be enforceable. We need enforceability. There's a really interesting issue, as many of you would know, that one of the challenges we find at the moment is the actual enforceability, for example, of e-bills of lading, the actual acceptance of e-bills of lading, when you consider it's less than 1% for bills of lading. And I know Kunio's articulated very clearly some of the challenges from a customs point of view, and I think, Wamkele, you identified them as well. But one of the underlying pieces is the ecosystem is not enforceable effectively enough, and we need to work on that. I'll come back to some reform proposals around that. We also need to incentivise, build capability and incentivise. There's two elements there. And Kunio talked about capability, and I'll come back and talk about that as well. But if you don't have accountability or enforceability, if you don't have capability, and you talk about how do you motivate customs officials, how do you motivate others, you've got to incentivise them here. There's actually got to be an incentive for doing this as well. And what you do actually has to be accessible. And this is one reason I'm so glad to be invited by Hubert and the team to be working with the UN Economic Commission for Africa, and we're doing so much more in Africa, because we actually think bridging this digital divide is critical, because so many of the businesses that are part of the ICC are in Africa, and we want them to have the best shot. So whatever we do needs to be accessible. But the other point I add to that, my fifth point, is that what we do has to be relevant. There are a lot of interesting ideas, a lot of interesting apps, but unless they're actually relevant to those who use them, then what is the point? And I'll come back to that in a second. So I won't take up a lot of time, because I know that there's a lot of important interventions to be made. We're just going to this issue of enforceability. Wamkele, when we first spoke, actually, I talked to you about one of the great opportunities for the leaders in Africa to take up what is actually already on the table, to ensure access to an enforceable digital ecosystem, which is really what we've been working on, is taking the pure work that was done by Untitled and actually applying it. And actually what we're talking about there is the Untitled model law on electronic transfer records, or MELITA, as it's handily known. Often people don't know what it stands for, but that's what it is. And let's not forget, that was pulled together over 6 years in a very, very collaborative manner, and actually has developed an enforceable, basically a usable and enforceable tool. And that's what we've been working with, and that's what we're advocating. And we think what it can do is provide this legal recognition of electronic transfer records, digital warehouse receipts, bills of lading, bills of exchange, in a way that is technology neutral, and to the greatest extent possible. What we like about it is future-proof. And it's gathering pace. So I just mentioned what we've achieved at the G7. We're taking this on to the G20. We've created this digital standards initiative that some of you would know in Singapore, and we would dearly love, as I said to you the other day, Kunio, to make that as inclusive as possible. We would love the WCO to join the advisory board. In fact, I had a meeting this morning. I said, I really, the issue of ensuring customs is fully aligned and supported with the standards we create is so critical. And what really your standing offer for you at the African Continental Free Trade Agreement to participate in that governing body. We want it to be inclusive, because what we're doing is actually trying to change the world by ensuring this platform, which everyone's been talking about, the standards everyone's been talking about, is actually exist, and that's what we're working on at the moment. So I commend the model laws to you as a policy intervention, because it does support the ecosystem. I talked before, the other point I mentioned was around capability and incentives. I think we'll come back to capability, we're looking at incentives. We want to encourage uptake by companies of digital legal identities to assist with customs clearance. And I think Kunio has articulated the reasons for that before, and KYC checks by banks. So digital identities such as legal entity identifiers, or LEIs, create value in eTrade by reducing transactional and operational friction in the identification of transaction counterparties and making important information about the background of a legal entity in a particular transaction more accessible. However, the broad adoption of these is yet to materialise. And part of the solution lies in the creation of a strong network of advocates through our ICC's Digital Standards Initiative. That's something we're pushing on a global basis at the moment. And that will be a key pillar, a convening opportunity for that. And that's another reason why we really like our African brothers and sisters to join us in this endeavour. Because if we can get that moving, that will actually solve problems around KYC and LEI. But we should also consider further incentives. And of course, we talked about capability. We lead and we created the Global Alliance on Trade Facilitation to build the very capability. What is the point in enabling digitalisation? What is the point of having electronic certificates of origin if the customs agencies don't have the capability to apply them? There's certainly motivation, and motivation, as Kunio said, because it's a way of generating revenue, but that motivation is not new. It's been there. We're still missing the capability. So we stand ready, willing, and able to bring in the ability, our proven ability to actually identify the problems, the blocks in advance, and create the necessary reforms to enable effective trade facilitation and basically working with customs agents and others. So we're more than happy to do that. But not enough nation states are taking that up. So again, leadership on that could really help, because as I said, we can create an enforceable ecosystem, but if you don't have the capability, you can't actually apply it. I mentioned before relevant tools. I just want to mention 3, because I think these tools are all very relevant to ensuring that you've got a functioning African Continental Free Trade Agreement. I think we've talked at length about certificates of origin, so I won't go on about that. But I mean, I think as Hubert said, and I think as Kunio said, and I think as you've also said, Wamkele, electronic certificates of origin are critical, but the accreditation chain is really important here. And at ICC, because of our governance of that voluntary chain, we again stand ready, willing, and able. And we're already in discussions with all our chambers of commerce. As you know, we have a regional action network that operates in Africa, which brings together the national committees of the ICC and chambers of commerce in, I think it's 47 countries. And so we meet on a quarterly basis, and we are pushing that. They understand the importance, and we will be incentivising participation in that. But there's more than that, because we not only talk about the need to support SMEs, and one of the great challenges for SMEs is not just rules, but actually enablement, which is how do they get financing? Now, I know that's a hoary old chestnut, but again, I've just come off a call, which is we've put together the Action Group on Trade Finance, which is chaired by Marcus Wallenberg from the Wallenberg family, but the banking family in Sweden. It's globally recognised, and also Victor Fung from Asia, from Fung & Co. And the reason we brought that in, because we see a looming spectre of problem around access to trade finance. So we have been arguing, again, we're in the process of creating an effective and compelling economic case, because we don't think Basel III stewards will simply react to the politics of this or the good wishes or the need. They need an economic case that shows the low risk, and we're actually working on that because we have our own trade register, which is real-time data, which we can now better understand how to use that in an effective advocacy tool to take that, to actually free up some of the flexibility that's required to enable greater access to trade finance. But that won't be enough. The policy settings won't be enough. So what we're doing through the Digital Standards Initiative is improving standards to support that, but we're also creating tools. So we are creating, ICC has created a platform now called ICC Trade Now. We're crowding in fintechs. We've actually launched two approaches already, one working with Finastra out of the UK, one of the world's top 3 fintechs, to create effectively a fintech-enabled factoring. And what that does is lower the cost and make it more accessible. And so we're actually creating that. We're actually launching that through our chambers and national committees. We've also put together trade capital. We're creating ICC Trade Capital Flow, which effectively provides back-to-back financing for commodity trades. And that's actually not for billions of dollars. This is for exactly the kind of trading and export trading which is so common in Africa and so important to Africa in terms of exports. So we believe not just in creating policy frameworks and standards, but actual relevant tools that work and are accessible. And in that regard, I also want to mention that if you want African traders to participate in the global export world, we've got to be relevant. We also have to be mindful of the context. What is going to be required is actually, you don't want a situation like Mercosur, where the European Union Mercosur agreement fell apart and can still be put together again because of concerns about sustainability. The inability of some Mercosur countries to show that the goods and services sourced would actually comply with European best practices in terms of sustainability. So we don't want that to happen. So we have created a tool to support that. What we actually created, it's called ICC SME 360X, which enables at a very, very, very low cost, because it's designed for SMEs, to actually show what their GHG footprint is just briefly, and then show them and give them tools to actually change that, to bring it in line, and then we accredit it. That accreditation from the ICC, the level that it's given, and gives them access to procurement chains on a global basis, will give them access to financing. We're not yelling at people, we're not seeking to punish people, we're seeking to incentivize people to actually get involved in global trade, which is what we want and what the African Continental Free Trade Agreement is so capable of delivering. So they're the sorts of things we're thinking about, and those sort of things we're working on right now. And what we really want is to have deep engagement and collaboration with the team here to see if we can pull it all off. So thanks very much for the opportunity to participate tonight. I should say.
Yeah, thanks very much, John. I think I think you've said it all effectively. A rich feast of options for us to now try to home in on which ones we can really build momentum around credibly. So I'm sure that Wamkele will respond at the end to all of us that have put some ideas on the table. But we certainly share the view that we need tools, as many of the practical tools that we can invest in as the private sector, that we know can meet the market need, rather than sort of talking amongst ourselves about what needs to happen. I think we have the resources to be able to make some of those things happen. So I'm now going to turn to the second part of the program, hopefully within that same spirit, where we are talking about this great and urgent need for, credit verification, the ability to know who your counterparty is, the ability to assess and sort of evaluate and analyze counterparty risk, supply chain governance, and those types of things. So I'm pleased to call on two of our Secretary General friends and partners, Vinco David and Peter Mulroy. But before I do, in the spirit of practical tools and seeking to demonstrate, what technology can do and how we approach it, we're going to just take you through very briefly AfricaPLC Insights, which is our new data and due diligence, corporate data and credit checks solution, which essentially was designed coming out of these types of discussions, seeking to take a discussion into a practical tool that can be applied to meet a market need to unblock finance. So essentially, AfricaPLC Insights helps companies excel in Africa through data-driven business intelligence, coupled with local expertise. Technology won't work on its own. It really needs us, who have that market insight and knowledge and capability to assist that. And that's whether it's evaluating supply chain risks and governance, debtor management, or counterparty intelligence. The platform is really designed to source, verify, monitor, and analyze commercial data. And we're very fortunate enough to have access to a database of 10 million African SMEs, probably the largest anywhere amongst any of the key institutions. And it's designed and it will be made available to unlock, our Africa's growth story, particularly targeting banks and traders. So I'm now going to call on Mene just to share just a little bit of information on that, and then we're going to go to Vinco, who has stimulated this discussion right from the very beginning. So over to you, Mene.
Hello and welcome to AfricaPLC.com. Edition, we will showcase how easy it is to conduct a credit verification report on a customer. Start by logging into your account, vendor at AfricaPLC.com. Your account is protected by a two-factor authentication code provided by authentication apps such as Google Authenticator or via email, depending on the setup of your account. Log into your vendor dashboard, where you can view critical insights into the performance of your business. We are going to select AI Insights menu and Credit Report. Corporate data and credit check services provide insightful information for data management as well as procurement services. Select Credit Report Online. 3 easy steps. Complete the form with the correct data, receive a verification code, and then proceed to pay for the report. Download the report. We are going to run a credit check on a customer called Bob Track, operating out of South Africa. Do we have consent to conduct a credit verification report on the company? Yes. Request the report. Thank you for requesting the report. The verification code and request for payment will be provided to your email address, usually within 5 to 7 business days. It's sent to the Africa PLC Service Check Administrator, confirming the details of the requester and the customer on who the report is intended for. The customer also receives a report. In this instance, the data is available and is immediately approved. Please proceed to payment. We know that this company operates out of South Africa. I'm going to order the credit report. Proceed to checkout. Various options for payments are offered: Bitcoin, a trade account, digital money transfer or PayPal, direct bank account, EFT, cash payments on delivery, or payment by card. Add this report to my account. Confirm the GDPR data requirements. The order is processed. Notification is provided. Thank you for your order. It has been received. Trade account number. I draw your attention to an optional contract processing fee that can be set as a rebate or a royalty. Following payment, the customer is furnished with a reference number. Copy the reference number. Proceed to download a copy of the report. The system now processes the reference number and withdraws the report from the data room. Congratulations, the report is confirmed. Click to download. A full credit report, 9 pages, is available on this customer. Company information, contact details, tax information, list of officers, ownership structure, information on directors, bank account information, bank code, operational activities, the footprint of the company, trade references, court notices, adverse supplier listings, bribery and corruption risk index, conflict of interest, social media index, company videos when available, and lastly, the AfricaPLC score expert, rating this customer a 4 out of a potential 6.
Look, thank you very much, Maynard. I think that gives a bit of a picture about the response to some of the market needs. And I'm going to turn right now to the person, as I said, that has really been, tireless in his advocacy and calls for this data impediment, this lack of data, which apparently hinders the trade finance community and the export credit insurers and a number of the financial service providers critical to fueling and financing our trade through various facilities, feel that this information hasn't been available digitally at scale or with enough different options. So it's now my pleasure to give the floor to Vinco to share his perspectives on resolving this. Thank you.
Thank you, Hubert, and also thanks to Maynard for his presentation. I'll get back to that soon. Today is Africa Day, and I'm very pleased to announce that the Berne Union has set up a dedicated committee for Sub-Saharan Africa to promote cooperation between our public and private member credit insurers to promote trade in and to Africa. Cooperation is very much the buzzword today. I just want to give one other example, and that is our cooperation with development banks, both multilateral and bilateral, and with commercial banks. On 7th and 10th of June, we will host a conference on how to make better available finance for climate finance. That's, of course, also climate finance for Africa, but it's more in general. But let's now move back to Africa. Why is reliable credit information so important? In short, it reduces transaction costs and it unlocks new markets. In addition, that's what many forget, but that's equally important. It also enables automatic processing of credit worthiness, of credit assessments of companies, and based on that, credit insurers can issue credit limits to their customers instantly online, and that's very much appreciated. So not in days, not in weeks, but in seconds. But why is reliable credit information so important? Perhaps I'll be using oversimplified words, but goods and services are often sold on credit, and selling on credit gives the seller a competitive advantage because buyers don't like to pay in advance. Terms of credit may vary from just a day for some perishable goods, for instance, to more than 10 years for infrastructure. But credit is risky, the goods may not be paid, and the seller thus needs protection. Credit insurance and bank products such as LCs and guarantees are the obvious solutions. But there is a big difference. Bank products are typically much more expensive than credit insurance, certainly in Africa. And they also reduce the seller's credit limits with his own bank. Credit insurance for open account sales is cheaper and does not reduce the bank's credit limits. Today, about 14% of global cross-border trade is credit insured annually, or last year that was about $2.5 trillion. A fair amount that is insured by the Berne Union members. A fair amount of these transactions would only happen with credit insurance. This protects the continuity of the seller and also unlocks bank financing or even factoring for working capital. The role of buyer information is essential for insurers to assess the credit risk. And this is the bottleneck in many African countries. Perhaps not so much in South Africa or Botswana. These are the two big exceptions in sub-Saharan Africa. But in most other sub-Saharan African countries, that is the true bottleneck. The share of credit insurance in cross-border trade in Africa is thus much lower than the global share of 14%. In sub-Saharan Africa, it's just a few percent. And this is partly because of lack of reliable credit information. This lack leads to higher costs and missed opportunities for African companies selling to other African companies and to companies requiring imports for their business. So what's at the root of this lack of information? What sets so many African countries apart? Now, I will analyze this within the framework of 5 policy recommendations. And at the end of these 5 policy recommendations, I will try to draw some conclusions also in monetary terms. First, there is legislation, or rather the lack of it. Many countries in the world have legislation and control systems in place to ensure the quality, timeliness, and accessibility of corporate financials, but not so in many African countries. Also, if buyer information is available, this is often only accessible for banks and not for insurers. This is a major reason why credit insurers, both African insurers and insurers from other regions, are holding back on underwriting corporate risk in Africa. And this is a considerable impediment to the development of intra-African trade and imports into Africa, especially for SMEs. The share of sub-Saharan Africa as a destination region for credit-insured trade is around $40 to $50 billion annually, or just 2% of global credit-insured business. This amount is far below the potential and needs of the region. So we need better legislation to get this buyer credit information available. Second, there is digitization, or also here rather the lack of it. If credit information is available to insurers, this is often difficult to access. Much of the credit information is stored in hard copy at mandated registrars such as companies' houses. This information needs to be disclosed online for more practical use. This does not only refer to financials, by the way, but also to other relevant information, such as, for instance, names of directors. Online information is especially important in times of the pandemic, when travel may be very challenging anyway. Third, there is transparency, or also here the lack of it. Transparency by corporates themselves is needed. They need to understand that it is not enough to disclose their financials to their bank. Also, suppliers, credit information bureaus, and credit insurers may require this for trade on credit terms. This allows for more recent, timely, and detailed information than if collected from companies' houses or any other official depositories of buyer credit information, if that is available at all. Thus, we need to explain to corporates and to educate corporates about a more open culture about their financials. Then fourth, briefly, fraud in trade finance is on the rise. Partly facilitated, I have to add, by online or digital processing. Examples are impersonation fraud, forged invoices, etc. More effort is needed in prosecuting and sanctioning and especially preventing these types of fraud. Fifth and last, African companies deserve better auditing. In many African countries, audited accounts are notoriously unreliable. There are exceptions, of course, such as for listed companies and for many companies in South Africa and Botswana as well. But too often the accounts are insufficient guidance for the assessment of creditworthiness. Therefore, education of auditors is important, not only for the big firms, but also for smaller auditing firms that are closer to their customers. And auditing standards need to be monitored and enforced. Now, this all sounds a bit gloomy, but fortunately, progress is being made. I'll just give one example, that is IFC's Africa Credit Bureau program, that has been very helpful for countries such as Ghana, Mozambique, and Tanzania. Also, some institutions, such as already mentioned, AfricaPLC and Africa Investor, thanks Mene for your presentation, have begun to build depositories of credit information. But a lot is still needed, especially in the legal environment in many sub-Saharan African countries. Now, you may think, or may ask, if we implemented all these measures and schemes, how much may African countries benefit? Can we put a dollar figure to it, or at least a percentage of extra growth? This is, of course, extremely difficult because there are so many variables, and even soft variables, such as culture. But it's not impossible to plausibly sort of guesstimate the positive impact of implementing these measures. What we've done is the following. We've looked at two approaches. One is the following. Some countries have introduced the measures proposed by IMF since 2010, so the Africa Credit Bureau program. Trade within and to these countries increased faster, much faster than in other African countries. So what we've done is we've tried to extrapolate this increase to other African countries that have not or not yet introduced these measures to assess its full potential. And second, we looked at the scores per country in the World Bank doing business ranking for getting credit. We then applied trade data of the best ranked African countries to the entire continent. Now, it's still guesstimating, but if all African countries introduce these measures and systems for credit information sharing and reporting and move to the best practice on the continent, then this could lead to an increase in cross-border credit insured trade of about 35 to 40%, we guesstimate. This is, of course, a percentage. How much that would be in a dollar amount, we are not sure because not all trade or cross-border trade is credit insured. But it's fair to say that it would be in the order of some tens of billions of dollars of extra trade. Thanks to better credit information and the whole legislatory framework around it, this leads to lower financing costs and opening up of new markets for many African companies. Thank you, Hubert.
Thank you very much, Vinco. I mean, this is exactly what we really want to be able to understand. It links us all back to the point of being able to quantify, do the analysis, and use the analysis for decision making in the context of providing data-driven insights. Over to you, Peter.
Thank you, Hubert. And it's a delight to be here. I just put a few slides together just to kind of give some messaging as it relates to, the future of factoring in Africa. I think we can just kind of start and give a very brief, just general introduction. Factoring exists everywhere, in every continent. But you could see in Africa where it's light gray, this is the places where we do not have members, we don't have, let's say, any activity or much activity. And so this is where we're focusing on. But the largest regions of FCI are in the traditional developed countries, North America, Europe, and East Asia. These are the three largest markets. It's the three largest regions for our organization in terms of membership and volume. We have about 400 members today in FCI, and we account for well over 80% of all international cross-border factoring activity. You can see here the statistics. I want to obviously focus on Africa, but again, to give it perspective, you can see Europe accounts for 68% of the global volume, Asia 26%, the Americas 5%, and then you go down to Africa, it's only a little less than 1%. So obviously very small, a long way to go, and I'll discuss that in a second in terms of the history and the growth potential. The industry's grown at around 7% globally on an annual basis, so compounded over to the past 20 years. It's just been phenomenal growth, and as well as cross-border. You can see in the dark red, but the lion's share of the business is domestic, about 80%. Now, this is the statistics in Africa. It's about a 25 billion euro size industry. And you can see South Africa leads the industry in terms of volume. It accounts for nearly 80% of the total Africa volume. And it's been growing nicely, 6% over the last 5 years, 3% in a very, very hard year in 2020. Followed by Morocco, and then Egypt, Tunisia, and Mauritius. So all of these countries have, let's say a small factoring industry with banks or non-bank financial institutions leading it. But you can see on the far right side, Africa has been growing nicely, 3% year over year. Last year, a surprise, quite frankly. Again, South Africa leading the way, considering that the challenges it had, and 5-year compounded growth of 4%. And this is just a repeat of that, and the two of the larger markets being South Africa and Egypt. FCI has 41 members in Africa, and you can see they're broken down, not evenly. Northern Africa is the largest region. We have 17 members as of 2020, and Southern Africa we have 8. Western Africa as well, 8. So these are the three largest regions in FCI. Now, I just wanted to say just some accomplishments and things that we're working on, and getting to your point, Hubert. First is legal regulatory advocacy. We have a number of projects going on. We're leading the discussion together with our partner, the African Export-Import Bank, relating to OHADA and the formation of a formal factoring law in these 17 OHADA countries. We have exclusive advocacy projects together, again, with the Afro-Exim Bank in Nigeria, Kenya, with the Pan-African Parliament in all various stages of development, awareness and promotion campaigns. We did a project in Egypt, and Egypt has really come on. You could use that as a really great test where they instituted a factoring law, factoring policy at the central bank level, so that there's a public acceptance, and now in the private sector it's growing in popularity, and you see more and more banks getting engaged. We had an event in Durban, South Africa, November 19, Nairobi, Kenya. This was my last event, physical event, in February last year, and we've had numerous webinars in the last 12 months. Capacity building, e-learning projects with the Central Bank of Nigeria, together with the African Capacity Building Foundation. We have a university program called COFIT, tethered with the University of Malta, that we offer to African students. And then strategic partnerships. We just launched a grant with the African Development Bank. This grant basically provides funds to allow us to basically hire consultants for institutions, provide e-learning, provide sensitization training to governments, central banks, et cetera, et cetera. We received sponsorship from the MFW4A, which enables factors to attend, for example, the Durban event and the promotional event in Nairobi. Now, in terms of factoring laws and their impact on the industry, I know this is on technology, and technology is going to play a very key role globally for the factoring industry, but I would say especially in the area of receivables registries. Receivables registries are the ability of banks, financial institutions to basically ensure that the invoices they're purchasing from the clients to finance are registered and have not been encumbered, purchased, or assigned by that same entity, basically leading to fraud. So it reduces fraud, and these are electronic registries. So they're phenomenal. Every country that adopts them, you see automatically a reduction in fraud, an elevation of transparency. These are the type of things that FCI is trying to lead together with our partners, the Afro-Exim Bank and, of course, the African Development Bank. But there's a general lack of understanding, obviously, of the product in developing environments. There's very little case law in factoring, and the tradition of publishing judicial decisions lacks. So it creates uncertainties. It also leads to a lack of confidence embedded in investor minds in Africa, who are concerned about the redress in courts to ensure that they get recovery against their rights as owners of the debts. So the solution, again, the receivables registry, the electronic receivables registry, e-invoicing, which is not here, but e-invoicing creates transparency. Model laws, so the Afro-Exim Bank has a model law on factoring. So does FCI, which in a sense was evolved into the Afro-Exim Bank model law. The Untitral model law on secure transactions with the UN body, the UNIDROIT model law on factoring, which is coming, and the FCI intervention with legislators and regulators. Now, I just show this because this is the future of the population in the world, the largest 10 countries in the world. 3 of them are in Africa by 2060. And they are Nigeria, Congo, and Ethiopia. 4, and Tanzania. So you have 4 of the top 10 countries that will be in Africa, the largest populated countries in the world. So the future of factoring is in Africa. Now, summing up, Hubert, if you look at the 2, let's say, angles, going along as we are now, a lot of, let's say, dysfunction, lack of understanding, limited laws, lack of registries. I anticipate that the industry would grow. You could see the history from a little over 10 billion to today, a little over 25 billion. By 2030, in 10 years, it could grow maybe to, let's say, 50 billion. That's about the same, similar growth rate of around 5-6%. However, if you have all these laws, registries, regulations, education, consultancy available today in all of the countries that we are operating or we want to operate in, I anticipate the industry would grow to over 100 billion. So double the size. And obviously that's significant. The overall factoring industry penetration to GDP is around 4%. In Europe is over 12%. So as we inch this up, the greater penetration it is against GDP. And as you know, factoring and reverse factoring really supports small to medium-sized enterprises. So they are the drivers of growth and the engines of economic activity in most countries, whether they're developing or developed. And this is where factoring really plays a huge role. And so every way we can inch this number up is just a way to improve and increase the effectiveness and the capabilities for SMEs in Africa in the future.
Thank you very much, Peter. That's spot on and very comprehensive. Let me just ask you one parting shot question. I mean, you came with we could double this to 100 billion as a perspective. So please just help me understand and help our colleagues, particularly the Secretary General of the African Continental Free Trade Area. It's very interesting. Timeline, and how would you projectize, accelerate that pathway to that doubling of the value of the industry?
Yeah, well, there's two offshoots that I see. Of course, you need to have SMEs access to capital to generate the business to trade domestically or internationally. So this is the no-brainer of what factoring can do in Africa. I mean, it's 25 billion, of which 80% is in South Africa. So you have about, let's say, 4+ billion in the rest of the continent. It's nothing compared to a $3.2 trillion industry. So it's the opportunity for growth is phenomenal in the continent, and we have proven track records globally. When you have all of these pillars in place to strengthen the framework, the legal framework, the regulatory framework, the transparency through receivables registries, etc. From an Africa free trade perspective, the huge benefit, of course, is the ability to do inter-Africa trade on open account. So a Nigerian exporter can ship to Ghana with a 60-day invoice, hoping to get paid. They know they can take that invoice and get financed, even though it's international, because of the fact that we've sprinkled the seeds of factoring in all of the countries of Africa, and now you have a vibrant industry. And globally, I mentioned before, 100% of factoring volume, 20% of it is international. In Africa, I think it's less than 2%. I don't know the number off the top of my head right now, but it's very small. So the upside potential to get that number from, let's say, a few percent up to 20% will have a huge effect on liquidity for cross-border activity in open account in Africa.
Fantastic. Peter, we certainly look forward to working with you to push that agenda forward. These are, all of the points that we're hearing from the industry, and we look forward to working with you and other Secretary Generals in this roundtable to take that forward and realize and unlock that potential. Thank you very much.
Thank you, Hubert.
And that leads us very neatly to Ayo, who's going to sort of just share some views, trying to share with us about how the UNDP are looking at the whole trade facilitation agenda, or the support for the African Continental Free Trade Area, and that interesting question where as we talk about quantification from a practical sense, this label that Wamkele carries, which is not only is he pioneering and driving the implementation of one of the world's most dynamic free trade areas, but COVID came, and now there's this additional expectation that his work is going to be the economic stimulus for the entire continent. So I'm now going to look to our colleague from the United Nations Development Programme to give us some insights about how we can take those elements and potentially put them into some kind of program of support, maybe drawing on trade facilitation where the trade facilitation agenda that Wamkele mentioned and that UNDP has a pedigree in working with the private sector. So over to you, Ayo. And then I know that Wamkele has a very hard stop. So we'll then quickly go to, if you could please be as brief as you possibly can, eloquent as you are, of course. And then Wamkele will just give us his closing remarks before he has to leave, and we close the meeting. Over to you, Ayo.
Thank you very much, Hubert, and thanks, distinguished panelists. The price of being the last is that I can be brief in order to make sure nothing is repeated. But I'll try to do my best today. And let me just start by saying that UNDP has about 3 strategic focus when it comes to the issue of trade facilitation on the continent. The first one is dealing with the issue of knowledge of opportunities, because you have to document, you provide evidence. Our experience in Africa is that when things are not documented, it's difficult for you to change anything. So that's the first thing. The second strategic focus will be whatever thing we want to do in enhancing capability for us to secure what they call the D support for the continent, particularly on the continental free trade area, because it's really very important, particularly in the area of trade negotiation, as well as investment negotiation, capacity building. And also partnering with my dear brother Wamkele on the need to execute and drive for the markets. So that's really very important. But let me just start from the conclusion of my dear brother Wamkele in terms of how do we leverage the past experiences we've had on the ground and on the continent to really support you in this era of digital trade. One of the things that I want to really mention is that what you're facing now is exactly what happened in the 90s when UNDP was called upon to come and work with African countries on AfCFTA. That's the automated system for custom data. It's the same thing. It was really vehement resistance. And we were able to see what we can do, in putting a lot of things together. And the same time, in recent time, on what we are doing on tax inspectorate without border, to digitalize the tax system. And it's faced a lot of resistance, but we succeeded. For now, we have so many African countries that have initiated e-filing, including Senegal, Cote d'Ivoire, Kenya, Ghana, Nigeria, and so many other countries, which is originally it was impossible. But I think one of the things what we usually do is adopting a whole of society approach. Because if your target is to change the mindset of customs, don't meet with them alone. If you meet with them alone, they will maneuver you. The experience we've been using is that, okay, you will be the head of custom officials in Africa will be there. But I think you need to bring what they call the policymaker authority, which is the Ministry of Finance, that establish policies on the issue of revenue, trade, and a host of other things that need to be done. So they need to be there. The Chambers of Commerce needs to be there. So this whole of society approach helps to really provide the evidence that is needed to show that, oh, it's not only you alone because you are working on behalf of the society. So this is what we use in changing the mindset during AfCFTA era in the 90s and the early 2000s, also recently in the area of digital taxation. So I think this is one of the areas one of the approaches we can use to really push this frontier forward. And in the second thing which you mentioned, I think before all these panelists go to Accra to meet you, I think it's really very important for us to really provide what they call an evidence-based analysis. Because if you don't show what the evidence shows about the impact of e-custom, they don't listen. So we need to do a kind of rapid assessment in terms of what have we learned in those countries, and I'm so happy that the ASEAN experience has been provided. What can we show as evidence that will drive the key messages of the event in Accra? I think this is one of the areas for us to really see how we can push this frontier forward, and it will help you a lot in terms of getting this. So that's one thing which is very important. Then the next thing, which is the third issue, which I just want to focus attention on, is using regulation as a stimulus for trade facilitation. Because if you don't, the major challenge we have in Africa is that, in fact, those regulations, if they are there, they're not coherent. The regulations that are put in place by Ministry of Finance is totally completely different from trade and investment. And how do we make sure that we turn these challenges into opportunities? And one, because we strongly believe we are able to harmonize at the country level and at the regional level and continental level. It will help us a lot to enhance the role of trade in facilitating the achievement of sustainable development goals. It will help us a lot to really, cut down the complexity of doing business in Africa. The ease of doing business is one of the major challenges, and I think without it, it will be difficult for us to really promote the kind of trade facilitation we're looking for. And also, it helps us to really, how can we use it to really promote predictability and certainty? Because without it, it's very difficult. So we strongly believe we need to turn these regulations from their current challenges to being opportunities. And we thought there's need for us to do this. And part of the things which you've been thinking about is the need for us to have some kind of champions. My dear brother, it's difficult for you to say you want to bring all the countries, all the African countries on implementation at the same time. There'll be motions without movement. But I think the best approach which we've been using, based on what we've got on the continent, is focusing on champions. Identify 5 to 7 champions that will help you to drive the process at the top political level, at the presidential level. These are the ones that will help us to champion some of these things. And we strongly believe that for us to get each of the champions, for instance, if you pick Ghana, where you are located as a champion, the president of the country, you need to do a case study in that country to show how digital trade would drive transformation in the country. So I think this is really very important. And again, we could probably turn this into an opportunity. Part of the things that we've been discussing with Hubert is for us to organize some kind of, around this, using this champion to organize roundtables that will help us to facilitate the trade facilitation we're all looking for. This is really very important for us to really see how we can really turn some of these things into concrete actions on the ground. And I strongly believe with this is really great. Now, the fourth thing which we are doing, which I think is really very important from this, is that, African countries, with the exception of very few, we specialize in trading of primary commodities and exporting primary commodities. Part of the things we do is the transformation from being primary commodity traders into value-added traders, commodity trading. So that's the kind of things which I think is really do. Then Hubert is one of the what they call African Influencer for Development champions, which we have created across public and private sector, but particularly driven by the private sector. And these are young entrepreneurs across the continent that will help us to really change the dynamics of the key messages that will help us to drive what we're looking for, particularly in the area of trade facilitation. So this is really key. And at the country level, we're working on making sure that our support is essentially on small-scale enterprises, particularly on value chain development. And this is one of the things which is really very important for us, because if you do not do a lot of value chain development, it's difficult for you to generate the volume of trade that will turn the tide in favor of Africa. So this is one thing which is very important, and this is what we do across all the countries in Africa.
I think with that said, I'm mindful that we're at time. Wamkele, thank you so much for co-hosting this with us and always inspiring us to bring this level of collaboration forward. So let me hand over to you now to give any reflections and any closing remarks that you have.
Well, thank you very much, and thank you to everybody for the really very, very helpful comments and very constructive comments. I know that we have been having these conversations now for a little over a year, and I am as anxious as you are to take them to the next step, and that is of implementation. Just some takeaways for me from this session. I think we discussed in detail the need for practical and concrete steps. I think that we all recognize that we have to have a very, very clear work program on digital trade, and that is something that is very, very important to me and to the work of the AfCFTA. The second important aspect of our conversation is that we must continue to engage the relevant stakeholders, the heads of customs authorities, and we shall convene that meeting and invite all of you, because I think a very, very important part of the conversation is the practical component that all of you have brought to the fore on digital trade and customs procedures. I would also like to really appreciate the point that Vinco made on his presentation, rather. This is something that we have started looking at along with AfricaPLC. We have started working with them to look at credit transit schemes, credit insurance for trading under the AfCFTA, and goods transiting across borders under the AfCFTA. And then the last point, I would like to take up this offer from John. It sounded like an offer. I hope it was an offer to do further economic analysis on providing evidence for digital trade and the importance of presenting data and analysis. So certainly that's something that we can take offline. And then I would just say that I once again appreciate all of the constructive discussion and the points that were made. I must say I am beginning to be frustrated with these Zoom sessions, because there is a limit to how much they're very good at facilitating work, but there's a limit in terms of how much in the world of commercial diplomacy, how much you can get out of them. And so that is why I'm very keen to get all of you to be engaged with heads of customs authorities when we meet with them. We have not yet determined the date, but we shall do so in due course. So thank you very much again to you, Hubert, and to everybody for this very, very rich discussion. Unfortunately, I have to run because it's Africa Day, so I have to go and make opening remarks at another session that started about 10 minutes ago. But once again, thank you very, very much to all of you.
AfricaPLC is an innovative B2B and B2G eTrade and e-commerce industrial marketplace and fintech platform that assists you grow your business in Africa and supports you champion the African Continental Free Trade Area. Accessing trade opportunities, credible partners, trade finance and reliable logistics solutions is the largest prohibitor for businesses seeking to expand across Africa and into global markets. AfricaPLC overcomes this by offering several fully integrated and secure digital industrial B2B and B2G marketplaces. These marketplaces assist millions of vetted buyers and SME suppliers manage their supply chains and access competitive trade finance, insurance and logistics services alongside each transaction. Buyers and sellers simply apply for registration. Once vetted and accredited by Africa Investor Ratings, they are listed on the platform and can post catalogues, request proposals, identify qualified business partners, and access competitive trade finance, insurance, and logistics solutions. For the public sector, AfricaPLC offers crowd buying and secure tender and procurement management platforms that support local content procurement from African SMEs. AfricaPLC is committed to supporting the growth of your organization through the African Continental Free Trade Area and globalizing African e-trade.